Hey everyone, welcome back to BullionIQ, your go-to place for understanding cryptocurrency, finance, and the most important developments in the market. If you are new here, smash that like button, subscribe, and turn on notifications because today we are diving into something absolutely mind-blowing that could reshape the way XRP is seen in the United States and potentially the world. Yes, I'm talking about the Cftc giving XRP a status it has never had before. This is huge news. And if you are holding XRP or even thinking about getting in, you're going to want to understand exactly what's happening. So let's jump right in. First off, the big headline is that XRP just got its first ever Cftc regulated listing in the US. Bitnomio, a newly launched US spot crypto exchange, has officially listed XRP on day one under full Cftc regulation. This means that XRP can now be traded as spot, futures, perpetuals, and options all under a federal U.S. regulator. No other U.S. exchange has done this before. Think about that for a second. XRP is moving from being just another crypto token into a regulated market infrastructure asset, and this is a massive legitimacy upgrade. It's no longer just speculation. XRP is now treated almost like institutional-grade collateral, meaning financial institutions can post XRP or RLUSD as margin the same way they would with treasuries or stablecoins. This is a big step for XRP and Ripple because it positions them as serious players in U.S. regulated markets. So what does this actually mean for you as an investor or as someone following crypto news? Well, the implications are huge. XRP is now directly part of CFTC regulated derivatives, meaning it can be used in physically settled futures, perpetuals, and options. This is exactly how traditional assets like government bonds or top-tier securities are used in financial markets. Essentially, XRP is moving from being a speculative trading token into a core infrastructure asset for U.S. financial markets. For long-term holders, this is a huge narrative win because it changes the perception of XRP from just a crypto token to a serious, trusted component of regulated trading. Bitnomio, as a registered designated contract market, has set up XRP and RLUSD as acceptable collateral for leveraged trading. This includes futures, options, and perpetual contracts. What this means is that XRP is now a usable asset in a fully regulated futures clearinghouse. The combination of spot trading and derivatives under regulation creates a scenario where institutions can actually use XRP in ways they were not able to before. For example, banks, hedge funds, and large trading desks can now use XRP as margin in the same way they use cash or treasury bills. This opens up a new level of institutional participation in XRP. Now, let's talk about the strategic angle. Ripple isn't just pushing XRP, they're also promoting RLUSD, their USD-backed stablecoin, as part of the collateral stack in US markets. This is extremely important because it positions Ripple's ecosystem as more than just a payments network. It becomes a full-fledged infrastructure for regulated finance. By integrating XRP and RLUSD into CFTC-approved structures, Ripple is essentially creating a new plumbing for digital assets that can be trusted by professional traders and institutional investors. This is what people mean when they say Ripple is playing 4D chess while others are playing checkers. On top of this, the ETF landscape for XRP is heating up. Bitwise and other funds have launched XRP ETFs to give investors easy exposure to the asset. The market has shifted from seeing XRP as a risky, legally challenged asset to one that can now be fully integrated into regulated financial products. This is a major shift in narrative. Before, the SEC lawsuit against Ripple held back real-world adoption because no institution wanted to touch an asset under legal threat. Now that the lawsuit is over, XRP can finally be adopted, integrated, and used in real financial systems. The playing field is officially level. Now that we've covered the massive news about XRP getting its first ever CFTC regulated status, let's dive deeper into what this actually means for institutional flows, market liquidity, and the overall price potential. Because if you're holding XRP or planning to, this part is crucial for understanding why things could change dramatically in the coming months. First, let's talk about institutional adoption. The fact that XRP is now listed under the CFTC framework means that large players, hedge funds, asset managers, and even traditional banks can now treat XRP as institutional-grade collateral. This isn't just theory. This is how institutions normally use assets like U.S. treasuries or blue-chip stocks to post as margin and leverage trades. XRP being allowed in the same way is a fundamental shift. Previously, XRP was limited to speculative retail trading, and institutional investors were hesitant because of regulatory uncertainty. With this new framework, that barrier is gone. This could lead to a huge influx of institutional capital over time. Next, consider the role of XRP ETFs. Bitwise and other fund managers have launched ETFs giving investors direct exposure to XRP. These ETFs are not just tools for retail, they are mechanisms that absorb large volumes of XRP from the market, often locking coins into cold storage for weeks or months. What this does is effectively reduce the circulating supply available on exchanges. Combine this with growing institutional interest, and you have a classic case of supply pressure meeting rising demand. Economics 101. When demand rises and supply is constrained, prices generally go up. And in the case of XRP, this supply squeeze is happening before the broader public even fully realizes it, which is a key factor for potential price appreciation. Another important point is liquidity in regulated venues. With XRP being approved for margin trading under the Cftc, you now have a situation where liquidity can flow in regulated and transparent channels. This is significant because transparency reduces risk for institutions. When an asset is opaque or uncertain, professional players stay away. XRP's integration into regulated derivatives markets, physically settled futures, and options creates a safe and predictable ecosystem for large capital. Over time, this could encourage sophisticated hedging, basis trading, and structured products, all of which further strengthen XRP's position in the market. We also need to touch on Ripple's RLUSD stablecoin. Ripple is not just pushing XRP as a trading asset, they are pairing it with RLUSD in these regulated markets. This is huge because it bridges stable value with liquidity, making XRP even more attractive for institutions. Think of it as a two-part system. XRP provides bridge liquidity, and RLUSD provides stable collateral. Together, they create an institution-friendly ecosystem that could be used for trading, settlements, or even cross-border payments. This strategic move could make Ripple a serious contender for shaping how stablecoins are used professionally, beyond retail or payment applications. Let's also consider the global perspective. XRP isn't just moving in the US, it's advancing in Europe as well. Ripple's Euro-backed MECA-compliant stablecoin on the XRP ledger is now live on Swissborg, allowing users to buy in 15 fiat currencies. This is important because it demonstrates that XRP's ledger can handle regulated payments and tokenized assets in a real-world setting, not just theoretical use cases. Institutions like KPMG are auditing it, banks are backing it, and regulators are signing off. This positions XRP as a global payments and settlement infrastructure, not just a speculative crypto token. Another key consideration is market psychology and positioning. Many retail investors may still be hesitant, but institutional players are watching closely. They are positioning quietly, accumulating, and preparing for larger moves. This accumulation by smart money often precedes significant price appreciation. It's like a chessboard. While the casual trader sees small moves, the big players are setting up for a major strategic play. XRP's new regulatory status is the opening for that play. Finally, think about the timing and potential future flows. ETFs, institutional adoption, stablecoin integration, and regulated margin use all point to a coming phase of higher demand and reduced supply. This is a setup we rarely see in crypto, a combination of real-world adoption, regulatory clarity, and professional participation aligning simultaneously. XRP holders are in a unique position because these factors can compound over time, potentially leading to stronger price moves once wider awareness and liquidity flows kick in. Now that we've covered XRP's Cftc listing and how institutional adoption and ETFs could impact liquidity and demand, it's time to talk about XRP's role as a global bridge asset and why this is shaping it into a critical piece of the emerging digital financial ecosystem. This is where things get really interesting because we are moving beyond price speculation into real-world utility and strategic positioning. XRP has always been unique compared to other cryptocurrencies because it was designed to facilitate fast, low-cost cross-border payments. Unlike Bitcoin, which is primarily seen as digital gold or a store of value, XRP's ledger allows instant settlement between different currencies, making it a natural bridge asset. With the new regulatory clarity in the US, XRP can now operate in institutional-grade infrastructure, which means it could be used to move value between banks, clearinghouses, and exchanges globally. Think about it. The financial world operates 24/5 across multiple time zones with a constant need for liquidity. XRP fits perfectly as a liquid, fast-settling asset that can connect these fragmented systems efficiently. Let's look at how this works in practice. With projects like the DTCC pilot and Ripple's integration strategies, XRP could serve as the intermediate asset that connects tokenized securities, digital cash, CBDCs, and stablecoins. Currently, many financial systems are siloed. Each bank or market has its own ledger, its own rules, and its own timing for settlements. Moving funds between them often takes time and involves multiple layers of intermediaries. XRP acts as a bridge currency, allowing instant settlement between these different networks. This is not just theory. It's already being tested in live pilots with U.S. equities, tokenized bank money, and even cross-border flows. Another key point is that XRP is highly liquid, which is essential for bridging value. In the financial world, if you want to move millions or billions of dollars between markets, you need an asset that can absorb large trades without causing massive price swings. XRP's liquidity in regulated venues, combined with its CFTC-approved margin use, positions it as the most viable digital bridge asset globally. Institutions can now use XRP to manage liquidity between time zones, currencies, and regulatory environments while maintaining transparency and control. This is a level of utility few other cryptos can offer. We also need to consider Ripple's strategic role. Ripple isn't just focusing on XRP as a speculative token. They are actively positioning RLUSD and other stablecoins alongside XRP in regulated markets, both in the US and Europe. This creates a complete ecosystem where XRP provides bridge liquidity and RLUSD provides stable collateral for trading and settlement. European adoption through MECA-compliant Euro stablecoins strengthens this ecosystem further. Banks and institutions in Europe now have a regulated way to use XRP and RLUSD in real-world financial operations. This is critical because global finance is not confined to the US, and cross-border interoperability is where XRP shines. Another major development is the integration with clearinghouses and derivatives markets. With XRP now usable as collateral in CFTC-regulated futures and options, we are seeing XRP enter spaces that were previously reserved for traditional assets like treasuries or top-tier securities. This changes how institutions can leverage XRP. They can now post it as collateral for leveraged trades, hedge positions, and even participate in structured products. Over time, this could lead to wider adoption by professional market participants, which creates a feedback loop. More adoption, higher demand, stronger market confidence, further adoption. Let's also discuss price discovery and transparency. When XRP trades in regulated venues with spot, futures, and options, it creates a transparent market where price is discoverable and reliable. This is important for institutional players who need trust in market data before deploying large amounts of capital. Reliable pricing reduces risk, which encourages more institutions to enter the market. This is why the combination of CFTC approval, ETF accumulation, and regulated trading venues is so important. It's not just hype, it's infrastructure that supports long-term growth. Finally, think about the broader narrative. XRP is no longer just a token that people buy for speculation. It is now positioned as a critical part of global financial plumbing, a bridge between traditional finance, tokenized assets, stablecoins, and cross-border payments. Its new regulatory status and integration into real-world applications in the US and Europe signal that XRP could play an indispensable role in the evolving digital financial ecosystem. Early holders are not just speculating. They are potentially holding ERST. Let's talk about human behavior in crypto markets. Cryptocurrency traders and investors are highly reactive to news, trends, and market sentiment. When something like XRP getting CFTC approval happens, it's a huge confidence signal. Confidence drives action. Institutions see this as regulatory clarity, retail investors see it as validation, and media attention increases exposure. These reactions don't happen evenly. They start small, then ripple out, causing a multiplier effect. This is exactly what we are seeing with XRP. Early adopters are accumulating quietly while mainstream attention is still catching up, creating a perfect setup for upward momentum. Accumulation patterns are also critical here. ETFs and institutional buyers are locking up XRP into cold storage, which removes it from circulation. Large quantities of XRP are being held by funds like Bitwise and other institutional players, creating a supply squeeze. Less XRP on the open market, combined with increasing demand from both retail and institutional participants, typically leads to price pressure upward. This is classic market behavior. When supply is constrained and demand rises, price tends to react accordingly. Early holders who recognize these patterns can take advantage of these trends strategically. Another important factor is sentiment around regulatory clarity. For years, XRP was held back by the SEC lawsuit, and many investors were cautious. That caution is now turning into optimism because the lawsuit has been resolved, and Ripple is actively integrating XRP into regulated trading and collateral systems. Human psychology plays a major role here. When people perceive reduced risk and higher legitimacy, they are more willing to commit capital. This isn't just theory. Market data shows that ETF inflows and institutional participation are already increasing steadily. The market is responding to real-world credibility, not just hype. We also need to consider the FOMO effect, fear of missing out. In crypto, once a high-profile news cycle hits, retail and institutional investors start reacting quickly. When large funds announce ETFs or when platforms like Bitnomio start accepting XRP as margin, smaller investors notice, and they begin to accumulate as well. This creates a feedback loop. More buyers drive demand, which attracts more buyers, and liquidity becomes concentrated. Early awareness in this phase can be very advantageous. Let's not forget global adoption psychology. XRP's movement into Europe with MECA-compliant Euro stablecoins, integration with Swissborg, and the acceptance of RLUSD stablecoins shows that adoption isn't limited to the US. As international institutions see XRP being used in real-world regulated applications, confidence builds globally. Human behavior in finance often mirrors what is happening in other regions. If a regulated framework works in the US, European and Asian markets are likely to follow and adopt similar models. This increases the network effect of XRP as a bridge and settlement asset. Another psychological factor is trust in infrastructure. Professional investors and institutions prefer assets that are transparent, auditable, and supported by regulation. XRP's integration with regulated exchanges, derivatives markets, and collateral frameworks gives it a trust edge over other cryptocurrencies. This trust encourages long-term holding rather than short-term speculation, which stabilizes markets and allows for more predictable accumulation patterns. Finally, consider timing and scarcity. The inflows into XRP ETFs, CFTC-approved futures, and institutional adoption are creating limited availability on exchanges. With high demand, decreasing circulating supply, and increasing global adoption, the setup is ideal for a potential supply shock. Historically, these types of market dynamics lead to strong upward price movements. But here's the key. Being patient and understanding the macro picture allows you to participate without panic, taking advantage of the underlying trends rather than chasing headlines. First, let's talk about future adoption in financial infrastructure. XRP is no longer just a speculative asset. It is evolving into a core component of regulated financial systems. With its integration into CFTC-approved futures, options, and collateral frameworks, XRP has become a trusted tool for institutional liquidity management. This is significant because institutions rarely adopt assets that lack stability, transparency, and regulatory approval. XRP now meets all three criteria. Looking forward, this opens doors for global banks, hedge funds, and treasury desks to incorporate XRP into their daily operations for cross-border settlements, hedging, and liquidity bridging. Next, consider the long-term narrative. XRP is not just riding a wave of hype, it is building real-world utility. European adoption with MiCA-compliant Euro stablecoins, partnerships with regulated platforms like Swissborg, and the integration of RLUSD stablecoins in trading and collateral systems all point to a systematic expansion of XRP's ecosystem. Over the next few years, as more financial institutions and corporates experiment with XRP for real transactions, the demand for XRP could grow steadily and sustainably, unlike purely speculative assets that rise and fall based on sentiment alone. Another major factor is network effects. As more exchanges, clearinghouses, and financial institutions accept XRP, it strengthens the ledger's position as a global settlement infrastructure. Each new adoption or integration increases XRP's utility, trust, and visibility, which attracts more participants. This creates a compounding effect. The more XRP is used in regulated markets, the more attractive it becomes for new institutions, creating a self-reinforcing cycle of adoption and credibility. We also need to discuss potential regulatory clarity worldwide. Ripple has shown that it can navigate US and European regulations successfully. This sets a precedent for other jurisdictions, potentially opening doors in Asia, the Middle East, and Latin America. If XRP can achieve adoption in multiple regions under compliant frameworks, it could become the default bridge asset for cross-border payments and tokenized asset settlements globally. This level of adoption is unprecedented in crypto and positions XRP as a strategically vital asset in the digital financial ecosystem. From a market perspective, XRP's supply-demand dynamics are also very compelling. ETFs and institutional custody are locking up large portions of XRP, creating a reduction in available circulating supply. Combined with increasing adoption in regulated platforms and as collateral, this sets the stage for strong upward price pressure when new demand hits the market. Investors who understand these structural dynamics can anticipate long-term value appreciation, not just short-term speculation. Looking ahead, XRP also benefits from technological flexibility and innovation. The XRP ledger is highly efficient, fast, and low cost. It supports tokenization, smart contracts, stablecoins, and other financial products, making it future-proof for multiple use cases. Unlike other blockchains that are limited to one function or suffer from high fees and slow settlement, XRP is scalable and adaptable, which increases its attractiveness for both institutions and developers. Finally, let's consider the community and strategic positioning. Ripple has consistently shown that it plays the long game. With partnerships, regulatory wins, and strategic integrations, Ripple is positioning XRP not just as a speculative token, but as a central infrastructure asset in global finance. For holders, this means that XRP is not just an investment, it's a stake in the future of regulated crypto finance. The foundation is being laid for long-term growth, adoption, and potential integration with traditional financial systems in ways no other cryptocurrency has achieved.